Hello and very warm welcome to the home of high probability trading. My name is Tim and I'm one of the traders here at the live trade room, and what we're about to do is to trade the US Open fully live and interactive. Just very quickly, for those of you who are interested in learning how to trade the financial markets to make consistent returns with a high degree of knowledge and understanding, then we can certainly help you as an organization. For more information, just simply go to our website, thelivetraderoom.com. For more information, we offer traders a vast range of products and services, all at very, very low cost. So I'm sure there'll be something there for you. And you can connect with us as well through our website. So there's a chat function there. And if you have any questions about how to progress with your trading career, then certainly you can get in touch with us there, and we can see what we can do to help. So over the next hour or so, what we'll be looking to do is to go through everything we need in order to position ourselves and look for high probability trading opportunities for the US trading session. So we're looking for these opportunities across foreign exchange, commodities like gold and oil, and also the indices markets as well. So without further ado, then let's get straight into it. If we could start, just as we always do, with our risk warning, please do just take a brief moment to familiarize yourself with our risk warning currently up on screen. And what's very important when you're starting your trading session is to just be mindful of some of these major news events. Just see if there's anything that's likely to impact perhaps some of your trading decision making. So let's bring up Forex Factory, and you can see that there's today, Wednesday the 24th now of March. These weeks and months seem to be ticking by very, very quickly. But up on screen, what we're really focusing on is our orange and largely the red impact news events. So today we have had CPI data. So there's a significant miss here with CPI. So we're talking about consumer price index, and it's a change in the price of goods and services purchased by consumers. So there's a lot of talk about inflation, but in CPI figures, you can see that we've not quite. The forecast was 0.8. We saw an actual figure of, and this is an annual figure as well, so it's quite an important one, of just 0.4%. So we're in this kind of reflation type environment, but as you can see, as far as the UK is concerned, that hasn't filtered through just yet. So in addition to that, we've got a number of news events this morning just regarding services and manufacturing, just to see where they are in the grand scheme of things, and they took a bit of a hit for a few months last March, and have largely been progressing steadily ever since. So the manufacturing sectors across Europe and the UK and the US have actually performed remarkably well over the last probably 9 months. But what we can see now is the services industry beginning to catch up. So as more and more services come online, so to speak, and sort of move out of kind of lockdown, we've still got the leisure and tourism, which is pretty much taking a massive hit. But you can see that there's progress being made. So above 50 implies expansion, below 50 implies contraction, and you can see the pan-European flash services PMI data is still in a period of contraction, but it's better than anticipated. So that's probably the major takeaway. Again, French flash services is better than anticipated. So still, we're not quite in expansion territory just yet, but you can see we're edging much closer to it. So mildly positive news there. You can see it's all green for the UK and Europe. We've got US flash manufacturing and services data due out. So that will be out 1:45 p.m. and these are UK times at the moment. And I suppose the big news really is a kind of a follow-on from yesterday's major news event, where we had Jerome Powell and Janet Yellen both testifying. And we've got the Fed chair yet again and Janet Yellen on the quarterly CARES Act report before the Senate Banking Committee. So they will be probably grilled somewhat, and the markets will be watching very closely. So what we can do if we're trading the US dollar, which we currently are, we will need to be very mindful of that event, because it may very well be a little bit of a volatile event. We've seen the dollar strengthen sort of post this event yesterday, in the build up to it, and then subsequently beyond it. So there's a bit of negativity around as far as the there's a bit of dollar strength around as far as the dollar's concerned, which we'll have a look at in just a moment. Just a couple of more news events for the day. So quite a busy day from a data-driven fundamental perspective. We've got crude oil inventories as well. We're expecting a positive 1.4 million barrel figure. If you can see, we had some very wild numbers there 2 and 3 weeks ago. So we're back to kind of some form of normality in terms of these numbers, and we're expecting a positive 1.4. And as always, if it's a positive number, it's likely to weigh heavy on oil. If we see a plus 3, 4, 5 million barrel number, then it's likely to imply that there's more inventories than perhaps was expected. So you would assume that would impact demand slightly, and as a result, you'd see prices rolling lower. The opposite is also true. If you get a minus figure, then inventories are actually less than anticipated. That's likely to increase demand and push the prices higher. So it's a kind of a counterintuitive news event, and to be honest, it's not always that reliable. So you've got to just assess market conditions at that time, and take the news event into account and see if it's worth positioning yourself or not. So it's quite a sort of almost a standalone event. And then we're going to finish the afternoon with Christine Lagarde. So she's due to speak at an online conference hosted by Project Syndicate, the European Investment Bank, and the European Commission. So I think this includes Q&A. So that's really largely why this is a significant event. So we'll have the Fed chair testifying, and then less than a couple of hours later we'll have the president of the ECB doing the same. So although at a very to a different cohort basically, but the markets will still be looking carefully. So that's what we've got to work with today. So we've really got let's say an hour and a half really before we start hitting the flash manufacturing data, which could be impactful. And don't forget, we've still got daylight saving differences, so we're 4 hours behind. New York are 4 hours behind, like UK time, for example. And I think this weekend, actually, if I just scroll down, I'll just show you more. Yeah, so it's daylight saving this weekend. The 3rd of April in New Zealand and Australia. We've got bank holidays as we close out at the beginning of April. Yes, so sorry, apologies for that. I basically skipped a week. So of course, this weekend, Saturday and Sunday, the 27th, 28th of March. So in the early hours of Sunday morning, we'll be shifting to daylight saving hours. So what it will do is it'll mean that the New York is 5 hours behind us yet again. So that's the point I was making. And then New Zealand and Australia the following week beyond that. Okay, so without further ado, let's have a look at these charts and we'll see what opportunities we have for you this afternoon. So sorry, just bear with me 1 second. I accidentally closed down my platform. So let me get that back up. Okay, so let's slide this across then.
10 minutes away now to the bottom of the hours. We wait the US durable goods orders, the preliminary February reading, 0.5% expected versus power of 3.4%, with orders seeing a range of -4.6 to 4.7%. The X transportation reading 0.5% expected versus power of 1.3, a range seen of -1.5% to 1.8%. For the cap goods orders, non-defense X air 0.5% expected versus power of 0.4.
Okay, I'll put that on hold. So that's just our Squawk service. So we just get updates as they're released through that service. So the pound dollar, what we've seen is a nice extended move, and as many of you know, or perhaps some of you know, that were here with us yesterday, we were looking for a pullback trade around the 37.08. The 38.07. So we got within grazing distance of it, and as you can see, the right trade in the right direction to the downside, as you can see. And now we're experiencing just a little bit of a pullback. So we would actually expect a pullback to these highs just in here. So this would be basically our understanding. So we'd expect prices to pull back to the 137.50. Let me get these numbers correct. Okay, so that's what we'd expect. So it looks like we're going to be edging further higher. So as we know, markets, they never move in a linear fashion. If I just take this off. So the one thing we have to do with markets is just know that they move in this direction. So we've always got to almost welcome the pullback, because they're inevitable. The prices can still head to the downside, and that's an awful drawing there. But the market is still moving to the downside. We're seeing a series of lower highs as this market edges closer, and also lower lows. So that is the definition of a downtrend, and this is what we want to capture. We want to get into markets that are trending to the downside, and we want to buy markets that are trending to the upside. So the one thing that's inevitable with this market is the pullback, and we'd expect it to actually push a little bit higher than these current prices before we get the next leg to the downside. So we're always looking for support and resistance and see how prices interact around those levels. So that's what we'll be doing. Okay, so currently pulling back, but our overall bias is still very much to the downside. This is it on a daily time frame. We're pulling back to an uncomfortable extent, really, but we would expect further squeezes lower eventually. And what we don't want to see really is we don't want to see this market close at this level. All it does is give opportunities for buyers to start squeezing prices further to the upside. So we've broken even on the trade, so there's no capital exposed on this market. But over the next, we want to make new lows and every potential to do so. But we're currently pulling back sort of 50% on that trade. We're in the pound dollar to the downside as well. So I suppose the main reason for that, just to talk you through the trade, there's a number of reasons really. We're below the 200 the monthly lows. This price action represented a structural failure to the downside. We've had a significant amount of sideways moving price action above and below that monthly low. And what happened yesterday was we got very close to actually making breaking through this little structural low down here. So there's a lot in its favor for prices to continue to push lower. Also, please note, this is your 200 period moving average up here as well. So we're actually trading below that level, which is exactly what you'd want to do. You'd want to be looking for buying opportunities above it and selling opportunities below it. So we've got that very important 200 period, and there's your 50 period and 100 period. So actually we're below all these moving averages, which is just something extra really to maybe give you a little bit of confidence. All we need now though is for prices to actually stay below this level, which is why technically our stop loss is only above the 200 period moving average, largely because if this market just reverses back this way, then we don't want to expose any more capital than is absolutely necessary. So we've broken this level. We're currently pulling back, but we're waiting for the next extended move to the downside. And let me show you what that will look like. For those of you that want to get into this trade, where do you get into it? That's a very important question to ask. So clearly markets are pushing lower. So we can identify these highs just to begin with, just to take back a step, and we can see that this is now a lower high. So there's a narrowing of price action in this market. So really what you're wanting to do is to perhaps be a little bit patient, and once we get some volatility either to the downside below approximately the 118.20, that would give you a green light for further downside price action, but actually also to the upside, maybe above the 1840 level. So you might get a little bit of short-term buying if that's coming in. So we're just getting this narrowing of price action just as we speak, and we probably expect that to continue, perhaps going into Jerome Powell's press conference, and where he'll be asked a whole series of questions. Okay, so that's the euro dollar. We expect it lower, but it's just got a little bit of work to do. What I might do is I might just mark this low just sitting in here. That would be a significant level in which to get into this trade, just for further moves to the downside. So we like the euro dollar lower. We're currently experiencing a bit of a pullback across many of these markets. There's a number of levels of support and resistance at these levels. So currently we're looking like we're going to squeeze to the upside. Like we said, there's probably a little bit more upside, short-term upside in this market, but we are comfortable looking for those selling trades to kick in. The dollar yen is just in this little zone. Yeah, Finbar. So the euro dollar trade. That opportunity below that 117. The 118 sort of 20 level is probably the next green light to see prices squeeze lower. So perhaps no need to get into that too quickly. The dollar yen is just in this sideways moving pattern. So unless we get some price action that is workable, we'll bypass that. So we'll have a look at the euro dollar, the pound dollar. We've got a number of levels of resistance up here at the dollar Swiss level. So again, it's just trade selection. We've got probably better opportunities to look at. If there's some dollar weakness, this is not a bad sell trade. Perhaps tomorrow might be a better opportunity to take this next leg to the downside. So as you can see, we've got this type of price action, and it's just really predicting what's likely to happen next. And actually, if the dollar strengthens and if the Canadian dollar strengthens and the US dollar weakens, then this is a prime candidate to actually take to the downside. So we just want to keep our options open regarding the dollar at the moment. Just looking at the price action over the course of the day. Seeing price action like this is really not great for the dollar. You'd want to see these markets pick up a bit more momentum to the downside. So that's the Aussie dollar lower. And then New Zealand dollar, we still like this market to the downside. We're still in this trade. We'd be looking to probably mitigate risk on this trade very quickly now. So there's our entry from yesterday. There's our stop loss. And we'll be looking to actually mitigate risk on this trade. Actually, there's no need to have capital exposed. I suppose our conversation earlier was just really to just see prices just break that level to the downside. The major reason for that is the potential for this market to just, pull back to this strong level of support before you get that next leg further lower. So that's what we'll be mindful of. We'll be watching carefully. So we'll have a look at the euro dollar, the pound dollar. We just want to have a quick look at the Aussie. So this, like the New Zealand dollar, basically has a little bit more upside to this before we're likely to get that next leg to the downside. So and this is not great price action really either. So for the dollar pairs, we'll look at the euro dollar, the pound dollar, the Aussie dollar. We'll go with the New Zealand dollar. So the euro pound, we've been speaking about this now for a few days, about these rejections of these highs, and we're seeing another one today now. So it's really not comfortable breaking above this level. So as a result, we can be nice and patient. We don't need to be jumping into it. So what we've started to see over the course of yesterday's trading day and again today is this risk off flight to safety trade, and one of the main beneficiaries is the US dollar, but also the the Japanese yen is picking up a bit of strength versus the pound and the euro, which have been quite weak. But what you can see on screen is actually a strong rejection like we're seeing across the dollar pairs. So is this momentum beginning to shift from risk off to risk on? That's the big question. to help us with that answer, we can have a look and see what's going on with the S&P. So for today's trading conditions, we're mildly risk on. Nothing that's earth-shattering to any great extent, but there is, positivity regarding stocks again after a few day sort of rollover to the downside. Same situation with the FTSE. Not quite there with the DAX just yet. Sort of a negative DAX and a negative Nikkei. So sorry, I digress. I was just sort of finishing off the yen pairs. With a risk on market condition today, it's not that strong, but it is risk on to a certain degree. We're seeing that flight to safety trade, and we're seeing capital come out of that a little bit and perhaps move back into your riskier assets like your indices. Okay. So we can certainly monitor prices at these levels. So we'll have a look at, just want to see which ones. So there's the euro is mildly stronger than the pound. So we can have a look at the pound yen. See see what the opportunities lie with this market. Again, we don't mind the pullback, but that this is the direction in which this market is moving in. We've got strong levels of resistance around these levels. There's your monthly high, and prices are rolling over to the downside. So there's this low in here. We've seen prices bounce back, and now we're looking like we could be extending further lower. So looking around this little structure in here, which we can zoom in on, we can check that little structure out and see if that gives us a viable opportunity to the downside. So what we can do is we can just push up and just have a look at these highs and lows. And what we'd be looking for is this market extend to the upside, pull back, drift sideways for a little while, and what we would like to see is that drop further to the downside. So the 148.89 is our strong level to the downside for the pound yen. For the pound yen. So let's have a look at that. We'll have a look at that in a little bit more detail now in just a second. Pound yen gold. So we spoke a little bit over the last couple of days about there's this type of price action really that's occurring in this market. If I just zoom out a little bit just regarding gold, so I get a little bit more information, what we're interested in strong levels of support and resistance. So we can see that somewhere in around the 1760 level is where we would expect this market to bounce back. That's where we'd expect it to bounce back to. We're a little bit off that level just yet, which basically implies we still might get that little move back to this level. So we just need to be a little bit patient with gold. There's a very small bid down at these low levels. So from a probability perspective, it's not fantastic at the moment. But if we do get this little move back to the 1760 level, then that could be the better place to look for the sell trade. The other alternative is actually the monthly low or below the monthly low, which is the 1715 level. So A break below that would be a decent sign for continuation lower. Moving on to crude oil. So you might have heard about the massive ship which is blocking the Suez Canal in northern Africa, and it's really blocking something like 70-80 other ships from actually getting through. And there's a lot of supply of oil to Europe and the US ventures through the Suez Canal. So if you can imagine, if you're restricting supply because it's stuck on a ship which can't move, and all the subsequent ships behind it can't get to their destinations, then it will lead to a restriction in supply. So by default, it's likely to support the price of crude oil. So, and that's really what we've seen today. We were expecting further continuation to the downside prior to this event, but and apparently it's about 1 million barrels per day. So it's a significant amount of supply, which is currently being restricted. So we're seeing this little impulsive move to the upside. Apparently they're in the process of refloating the ship, and hopefully it'll be on its merry way pretty soon, which then may well put a little bit more bearish sort of bias on this trade. So it's probably a little bit of short-lived bullish price action, and let's see if we get that rollover trading opportunity perhaps tomorrow in crude oil. So a couple of these trades are probably there in the pipeline. So the S&P, we spoke briefly about risk on market conditions. We're not going to blow our socks off with the volatility in this trade, especially as we move into to Jerome Powell and Janet Yellen in, I don't know, about an hour and a half or 2 hours. So we can have a look at this in more detail. Do we want to be buying these? Medium term, yes. Short term, we're not so sure. There's a few things to keep an eye out for. What I might do is just have a quick look at the 10-year, and I'll just bring that up on screen for you. So we're still seeing a little bit of a tapering of this bond yield, just a little bit. I mean, it's not excessive by any stretch. And this is where we're at over the last five trading days. So we're down at the 1.63. The level at which this bond yield becomes a significant problem from our analysis is around the sort of the 2.5 to maybe 3% level. That's when, the Fed will probably need to be make some very, very important decisions. And so as this market backs off its highs of what were we at, 1.75 just last week, and we've got the bond auction again today and tomorrow, so we'll see how that performs. It's the 7-year that we'd want to keep a close eye on, but we are monitoring right now. It is important to just monitor the 10-year Treasury note and just see how if the US government are selling debt, it'll be interesting to see what happens to demand and what happens to the yield. So at the moment, it's kind of nice and calm. It's coming off, and that's probably likely to support equity markets a little bit as well, and take a little bit of the heat which we've seen off the dollar just today. But that can change sort of really quite quickly. So it's something to just keep monitoring for now. JJ, good afternoon. Yeah, interesting news on oil. Yeah, it's a very interesting event. A massive shipment, literally getting stuck in the canal. So you'd imagine with all the engineers around that they would be able to get it moved on, refloat it somehow. I have no idea how they'll do it, but I'm sure we'll find out pretty soon. But yeah, so as a result, we could, this is fundamentally the reason why these prices are getting a little bit of a boost, having shown actually significant signs of an important break yesterday. This is an important level in yesterday's markets. So tomorrow, will we get that little rollover where we perhaps were due to get today? That's kind of our thinking on it. Let's see if they refloat it and supply gets back on track. Maybe the focus starts shifting to Europe again, and kind of lockdown conditions and suppressed demand and things like that. So there's a head and shoulders pattern on the Nasdaq over the last 2 days. What time frame? Okay, I see what you're looking at. Now, head and shoulders. I don't even know how much experience you have, JJ. Are you an experienced trader? You've been trading for a while. This to us is just consolidation. That's what it implies. Head and shoulders, and I'm really bad at doing these drawings, but it's where you get price action that conforms, creates a bit of a head structure, and what you're looking for in head and shoulders is prices that are just sort of, there's a high degree of symmetry with these trades, where you get that literally that sort of shoulder platform and the head, and this is too consolidative. All that's happening at these levels is that prices are bouncing off those highs and bouncing off these lows. So actually this is quite a good bit of price action. If we get a break of this level, then there's your strong breakout trade to the upside. There's your high probability buy trade, and also there's your move to the downside. So whichever way this market moves, there's a really good opportunity there. Listen, no problem whatsoever. Apologies if I wasn't suggesting, it's just we wouldn't refer to this as a head and shoulders. We'd refer to it as just a strong period of consolidation, and what you'll see from us quite a lot. So take a view of that where there's a high degree of symmetry, and this is your trading patterns maybe, and you've got literally the shoulder patterns, and then you've got the protruding sort of head part. So if I just take that away, what you'll often find with us is we just identify these lows and these highs, and we'll suggest anytime if we get a close above the 13,169, there's a very viable buy trade there, and a close below the 13,017 would give us actually equally a viable sell trade. So the only thing that would be a little bit of a concern is the fact that we're making these structural failure trades to the downside, and then we're making these structural failure trades to the upside, and it really, there's a lack of clarity there, isn't there? So we just want to see this, broadly speaking, this little zone. We want to see how this plays out. So breaking below the monthly low would be quite interesting. Breaking above this high would probably be slightly better quality trades than just trading inside this, because if there's a buy trade here, and technically there is 13,169, you can get into the upside. The problem that we would have is, we've got lots of levels of resistance just above it. So there's a big level of resistance just above these highs, and then you just got to work out, do you get the positive risk reward on the trade? it's questionable, isn't it? Like we're not so sure. So perhaps one to be a little bit patient with, perhaps. Yeah, the oil news might be a strategic move. Yeah, you might be right. Absolutely. You mean obviously whoever owns the ship to actually force it to get stuck. Yeah, worse things have happened in this world. So yeah, you could absolutely be right. So look, we're getting a bit more movement across the dollar pairs. I'm just looking at some of these dollar moves off screen. So we go back into them now. Yeah, listen, my pleasure. That's what we're here for sure. Yeah. Okay, so let's get these charts up. We will monitor the S&P just to see what's happening. It's just rolling over on its highs. So maybe the focus again might be the dollar, which has kind of been, I suppose, a trade that we've been looking at. So how far we're sort of 12 minutes away from the cash open in the US. So that's when we generally see a bit of an influx of capital coming into these markets. So let's get these trades up and running, so we will be able to plan and hopefully then execute some of these opportunities. Okay, so the I tell you what, let's just add the Aussie dollar as well, just to create a bit of symmetry here. So these are the markets which are kind of grabbing our attention at the moment. The S&P, we just want to keep just an eye out. We're not really interested in buying or selling. But we do have this multi-asset class view of these markets, so we do want to know what's going on elsewhere. And the Nasdaq, it was the oil markets, wasn't it? Oh no, sorry, it was the pound yen. We'll just bring the Nasdaq just down here, just so that we can keep an eye out for it. That's all we're really wanting to do with the Nasdaq at the moment. But we will have a decent look at the S&P. Sorry, at the pound yen, and you can see we're experiencing pound weakness. What I'll do is I'll just put the pound pairs together, and the Aussie and the New Zealand can go together as well. So, you know, when you're trading markets, you need to make decisions about which markets you should focus on, what direction should we be looking to trade them, where would we be looking to get in, and this is exactly what we'll cover right now. So you can have these trades. When we pack up this broadcast, you can make decisions on those opportunities. You can discuss them during this session, and hopefully they'll set you up with some what we refer to as high probability trades. And hopefully put you on the right track for, I suppose, sustainable, consistent returns when you trade. Okay, so let's see. So these are our basically 5 markets that we're looking at. So we confirm the direction. So we don't like to buy lows and sell the highs. So what we are breakout traders, and we're pullback traders. So when we see consolidation for a period, that's exactly what we're looking for, and then look to get involved in the breakout trade to the downside. We have all of the moving averages on the smaller time frames pointing lower. So it's really a case of when you trade, have as many reasons as you can. You're below the monthly low. We're in a downtrend. We're below the moving averages. We're creating a structural failure to the downside. So you're building a really nice picture. Just thinking here, we're breaking out to the downside, and all of a sudden breaking below today's daily low. So you kind of have this kind of approach to trading, and what you're hopefully left with is a no-brainer sell trade. So you're looking for prices to push lower. So that's an important part of trading these markets. What is the strength of your conviction? Most, especially new and inexperienced traders, they don't have any strength of conviction. They don't really know what they're doing and why they're doing it. They kind of learn over time that it's like a big jigsaw. So you need to put all the places into place, and then you can have a higher degree of confidence. So having confidence in your trading decision is something that can be learned, and you do that by stacking the odds in your favor, going through the process every time when you get into a trade, to what you need to see, what are the boxes that need to be ticked, and then you're left with a bit of a no-brainer, and you're actually a little bit more at ease about the trade, and then your risk management starts to come into play. So there's a little bit to trading profitably, and the more conviction you have, the more analysis you've probably done, and the more you understand about what direction these prices are likely to move towards. And that's really, it's trading the probability of a successful outcome. So we're looking for, we look at this market now and we think, right, at what point do we want to get into this trade? Well, we've got lower highs, but we've also got higher lows as things currently stand. So there's this little bit of funnel, bit of price action. So for safety purposes, below the 1820 level is our viable, so 1818 level is a viable sell trade. So it's getting quite close to the lows, but So yesterday we were looking for a breakout sell trade below the 1873. Now we are looking for that potential trade just 50 pips lower. So that's our trade. So looking for a breakout sell trade below the 1818 level. So one of the main things we look to teach traders is to be patient. If you plan a trade, wait for that plan to deliver. Wait for the boxes to be ticked. Try to avoid preempting a decent trade, unless you're getting in on the pullback, which would have been the previous high. That's a viable sell trade. It's just now the way things have developed, it's really, you want to get the confirmation below the 1818 level. So we can look now at the pound dollar. There's a strong level of
coming through from Fed Spark, in the economy positioned for a robust year as vaccines roll out.
So we've got this market just bouncing off this resistance. We've created a bit of a low. Now what we don't want to see is prices actually breaking above this level in here. That wouldn't be good. That would be a structural failure then to the upside. So, but what we can do in terms of a sell trade is look to get in below this price. So if prices roll over, then we've got a clearly defined level from our stop loss. Might work with a slightly higher level from a stop loss placement perspective, just above this sort of region of support and resistance. So place your stop loss above there. Entry looking below the 136.96. It's the 13700 really, isn't it? With a stop loss of maybe 55 pips or so. So that's potentially the trade to the downside. Just remains to be seen whether we'll get that opportunity or not. So let's label the trade. So looking for a pullback trade. So this is a breakout trade now. So this is we're looking for a breakout sell trade, and the new price. So yesterday it was below the 38.07. Now we're looking at it 100 pips lower, below the 36.96. 36.96. Yeah, and this would be a breakout sell trade as well. So we can be a little bit patient with that. The Aussie dollar, it's really kind of struggling to close below yesterday's daily low, isn't it? It's struggling to stay below that level. This is last night's low. This is prices extending lower and then pulling back to strong levels of resistance. So this is firmly this is firmly a pullback to resistance. So this is a strong level of potential support. Well, not a strong level, but it is a level. The other major level is a little bit higher, but once we get this price action, a structural failure trade to the downside below the 7600, we're likely to see prices continue further lower. And from a stop loss perspective, we can probably look at this high in here as a stop loss. And there's your entry. So it's not too tight, it's just a little bit further. So we'd be talking about 30, 36, 37 pip stop loss, probably something like that. So let's put this level in, looking for a breakout sell trade below. Now we're looking below the 76.08. So some really good moves in these markets from yesterday's session. 76.08. Okay, so again, really the last few hours for a lot of these trades have been a little bit uninspiring or uneventful. The strong level is the 148.89 for further continuation to the downside as we see it. So with actually a defined stop loss here above the 149.30, so you're able to position yourself. Potential sell trade below the 151.07, so that was up at these highs. So really good selling opportunity on this market recently. $148.89. So that's 200 or 300 pips lower than where we were discussing this a couple of days ago. So what you get is 4 currency pairs. In fact, we'll just do the New Zealand dollar. It's at the top of the hour now, so this is interesting. This is when we're getting this. We're getting the same move in this market as we speak. So 71.16. There's a potential sell trade there. We're already in the trade, so we kind of want this market to continue lower. We don't necessarily want to be adding to the New Zealand dollar. There's a little bit too much uncertainty, but it's not to say we won't add to it at a later date, just perhaps not now. But for those of you wanting to get into this trade, we have a stop loss up here. This will be brought down, I'm pretty sure, when we break below the 69.62. Plenty of room to the downside for this trade. Yesterday's break of the 70.90, very important break of these markets. And as you can see, loads of room for this market to continue its movement to the downside. Okay, so looking for a breakout sell trade below. Now we're much lower at the 69.76. 69.76. Okay, so these are the trades we're looking at. So you can see we're just getting that little break there in the New Zealand dollar, which is useful for the trade that we're currently in. Okay, so we're just getting a break below that level as we speak, and we're getting the follow through as well, it looks like. So you had the rejection in the last 15-minute candlestick, and now we're getting a continuation trade. So we're looking for a break of this level here for the pound, for the euro dollar. The pound dollar needs to break below the 36.96, and this trade here with the New Zealand dollar may be the first one to start breaking. So that's often what we find. If there's dollar strength coming into the markets, we can often see markets move one at a time and just have that sort of impact. You probably should avoid getting too sort of dollar heavy. We're adding to it slowly. So once we get into a trade, we'll assess the viability of it and then look to get into it. So it's continuing to squeeze lower. So that's good for our current open trade. And it looks like there's mild appetite to the downside, but it's very mild. It's nothing hugely has been happening for the last 3 or 4 hours. So it's not like we're missing an awful lot with this trade. If there's any trades that you guys are in that you'd like to have a look at, be happy to do it. You can see really here with this price action today for the S&P 500, it's quite indecisive. There's a lack of conviction across the equity markets there for the S&P 500. And when you look at dollar pairs like this, and they're all in the same sort of phase, so we're seeing the New Zealand first. Maybe we get the Aussie following suit next. Then it might be either the pound or the euro against the dollar, all pushing lower. So we're definitely on the trail for some further dollar strength. That seems to be the trade. That seems to be the trade. So let's see. Once we break through this level, the 69.62, we can then sort of look to mitigate risk and probably book in profit on the trade. So our pound dollar trade's already break even. Our dollar Swiss the New Zealand dollar sell trade will be in a position of booking in profit as well. And let's see if we get follow through across these. Hiya, Kalpesh. So you sold the pound yen from 15.65 and think it will go till 147.10. You closed 90% at 149.5. What's your view? Should you hold or exit? Aha. So we're actually looking to get into this trade to the downside yet again. So this one has, let's look at it on the bigger time frame. So the price action has not been sort of fantastic. We had the situation on Monday where the markets closed at this level. We opened much lower, created a bit of a gap, and then all price action did was just close that gap. But then once we closed the gap, you know, there was this sort of flight to safety trade really where the yen was benefiting and the pound was weakening across the board. And we started to break below this 150 level. So just confirm what the price at which you sold from, 15.65. You meant 150.65, is it? So 150.65. So you actually got in at the turn. So somewhere up here, that was your entry. Prices have continued lower. We've created a low, and your stop loss. Oh, sorry. You took 90% off. You think it will go to 147.10? Yeah, that's a viable target. Let's look at your target levels. So I'll tell you what, let me get rid of quite a few of these because we don't need them. Sorry, just bear with me a second. Okay, so here's the issue with this trade. This is our 50 period moving average down here at 146.70. So your target of 147 is probably pretty good. Oh, let me. Okay, so we also had the monthly high at the 150 level, so prices have rolled nicely below that. So you've covered a lot of the trade already, which is fantastic. Can I ask? Yeah, the 150.65 was your entry. Can I ask where you placed your stop loss, or so just going through, I'm just keeping an eye on these on the other side. So that roughly was entry really good entry actually. But here's the problem. This is technically a pullback off the highs. So the market had been moving to the upside. So you're quite right to want to take something off this trade. It's not something that we would want to commit wholeheartedly to the downside. So you've covered so the 149.50, so just roughly in here, you've covered at that level. Yeah, and you have a take profit sort of down this level. So I'd just be interested in this trade really in terms of where did you place your stop loss, and that's assuming that you're trading with with a stop loss. I don't know if you do or not. Not everyone does, but we've got certain opinions on trading without stop losses. But the reason why I ask is it will determine your positive risk reward with the trade. So you kind of have to weigh up each trade accordingly. So I don't know if you're still with us, Kalpesh. If you're not trading with a stop loss, please don't. There's no problem. Just perhaps say so, and because without knowing how much capital you're committing to a trade, it's obviously very difficult to determine what a profitable risk reward trade looks like. You're quite right. You do what we do, which is look to let those winners run. That's what you want to do. But you want to cut those losers short, and sometimes it's difficult to cut a loser short if you don't have a stop loss, but that's where the skill of trading really comes to the fore. Okay, so entry, you've closed off that one. We're much further lower. If we can sort of break through this level, and the pound is selling off as well, or it's beginning to sort of squeeze further lower. So we can certainly expect further downside. So I might come back to this in just a minute, Kalpesh. Let's just have a quick look. So we're getting close to the euro dollar, making that move lower. The pound dollar is getting a bit closer. The Aussie dollar is getting there. And you can see the first market to move really was the New Zealand dollar to the downside. I'm just going to have a quick look at the 10-year note. So this week, I don't know if you're familiar, but we've got a yesterday we had a 2-year bond auction, US Treasury note. Today, is it 3 or 5 year? 3-year, I think it is. And then tomorrow we've got the 7-year. So that's the view really. That's the sizable move to the upside, and it's kind of peaked out around 1.75 and just rolled back over to this level down at these lows. But look at the price action, which is probably why we're seeing a little bit of dollar strength begin to just slowly creep back in. We're seeing this bond yield just tick a little bit higher. Sorry, this little chart is going a little bit bonkers here, but let me revert back to some sort of normal chart. Okay, so we're seeing a little bit of an uptick in yields. It's just putting a little bit more pressure on the as a result, we're seeing a little bit more dollar strength begin to creep back in again. So that's good news for our trades. Sorry, let me take that back off. So let's see if we get the follow through, which we would anticipate. The other reason, Kalpesh, why I was asking about your stop loss is because we would always look to technically, track the trade. So we'd never want to expose this much profit. If that's your entry and you've already covered most of it and current prices are here, we would never want to expose that much capital. We wouldn't want prices breaking above the daily high, breaking above, the monthly high. There's no need to expose, and I appreciate, there's only a small percentage of your trade still intact, which is absolutely fine. But what you can often use is sort of major levels of resistance, which could be, in this instance, the daily high. So looking at the 149.38, just putting your stop loss above that daily high, because if you think about it from a seller's perspective, if prices actually break above that level, what would then be the probability of that trade? For us, it would be actually we're very likely to see some buying coming into this trade. And if that's the case, do you want to be holding a sell trade? The answer for us anyway is absolutely not. We don't want to be doing that. It'd likely push up to sort of the 150 level. And it really depends on, I appreciate you took the vast majority of the you booked in profit, which is a fantastic trade, so very, very well done on that. But what you and maybe your intention was to let the 10% run, perhaps, and if that's the case, let it run. But don't risk capital, either if it's profit or if it's your own capital in terms of risk. Don't needlessly expose any capital to these markets. There's just no need to. What I would suggest to you is, if you work with today's daily high, that would be, for us anyway, a sensible place to book in that much profit. And if prices reversed, and if your bias is still to the downside, all that means is you're able to actually sell this market at a higher price. So it's not a game over approach. It's booking in profit, managing trades effectively, and then looking to get into that next opportunity. And sometimes you can get into 2, 3, 4, 5, 6 opportunities, all based around the same ideas, booking in profit as the market moves in your favor. And then when it gives you an opportunity to pull back, you can still look for continuation. So I don't know if that was helpful to you in any way, but I would be booking in profit here just above the 149.38 on the trade. And if it pulls back, we'll have booked the capital, we'll have booked the profit, and we'll be looking to maybe get back in again around 150. But yes, a couple of great trades there, so very, very well done with that. So we're selling the euro dollar, we're selling the pound dollar, we're selling the New Zealand dollar. So we could look to sell. I don't know what's wrong with our squawk. Let me see if I can get this working again. Okay, sorry, it's logged out. So let me log back into it. Okay, great. Absolutely no problem. But a great trade there, Kalpesh, so well done. Okay, New Zealand dollar looks like we're edging lower. Okay, so what we can do is we can have a look at adding the Aussie dollar. So now we're getting that move. We just get our deal ticket ready. Okay, so just want to determine stop loss. We're just going to go with this just marginal new high. So we just give it a little bit more room. So let's get in on that trade with a stop loss at the 76.38, 76.39, 76.39, and let's pull the trigger on this sell trade. Okay, so I don't know why this level fails to print. So let's okay, so we're now in this trade, so we can add this trade. Okay, so yeah, Finbar, you're looking at the New Zealand dollar. So yeah, nice move to the downside. So we were looking for the break below the 69.77, 69.76, and we saw that nice little move lower. So we're already in that trade, so we're not going to add to it. We've just added the Aussie dollar, just for a bit of variation in the trade. So so hopefully we're going to get a further significant move across the dollar pairs. It looks like that's the case. It's unfolding right before our eyes. So hopefully we'll have further upside in those. Unfortunately, we do have to end this webinar. We've got trading sessions with other traders now at 1:30. So I'm going to have to let you guys go. Those are our trades. Keep an eye out for the euro dollar lower below 18.18, the pound dollar below that 36.96. We're just breaking lower with the Aussie dollar to the downside. The pound yen, we would expect it to continue lower, but it could be in the process of reversing. And that would be the concern regarding the yen. But the US dollar is the main beneficiary of this risk-off market condition that we're largely seeing. So it's really, the focus should probably be on the dollar, perhaps even book in profit, or at least put a stop loss just above the high. Would be all viable trading opportunities. So on that note, guys, thank you very much for joining us. If you'd like us to help you, genuinely learn how to trade these financial markets, just go to our website, thelivetraderoom.com, for more information. Ask us any questions through the chat function if you need. We'd be happy to help, and all at very, very low prices as well. So there is a small cost involved, but it is a small monthly charge just for accessing a wealth of products and services. So hopefully that's all agreeable. Finbar, yeah, that New Zealand dollar really getting a nice little bit of a run, and then we got that explosive move lower. So I hope you're on that one. Did you trade that one, Finbar? I wonder. So a good trade there. So look, on that note, guys, thank you very much for joining us. Please give us a thumbs up or subscribe to our channel. We'll notify you when we go live, and we'll look forward to seeing you again tomorrow, actually at 12 noon. So from everyone here at the Live Trade Room, thanks very much. Take care. Best of luck with these trades. So far they're looking really good, and let's see if we get that follow through that we would expect at this point. So enjoy the rest of the afternoon. Take care. We'll speak to you soon. Bye for now.